Wednesday's market closes higher in livestock, mixed in the grain sector. Sean Hecka with Hecka Financial Advisors joining us. And Sean, let's talk first of all about the grain sector. I want to specifically start off with soybean market because we saw a little setback here today. Was that profit-taking harvest pressure or the lower soybean meal market?
I think it's some harvest pressure, but I also think people are really worried about Brazil. The weather's been good. Lots of moisture, 155, 160 million metric ton crop. If we get to December and January and it looks like that crop potential is on the table, that is just not going to be met well with prices still relatively historically high, Michelle. I think the market is getting very nervous, especially with fresh supplies coming in from the United States. I just think it's hard to get momentum going there unless Mother Nature starts to take a turn in Brazil. And right now, looking pretty good.
And what do you think about soybeans? We're harvesting. Do you think yield reports are indicating that the crop's getting bigger or smaller? And what does USDA do in the WASDE?
I kind of think the USDA is probably about right. I don't think there's going to be any major changes from here. The reports I've been hearing so far from my customers and those that I trust, I think we got the number pretty close to being right. Meaning we've traded that reality, and now we need to trade something different, either on the demand side or on the production side, and I don't see, we're just not quite there yet. And so in the meantime, when you have fresh supplies coming in, you sell. And that's really what I think we're seeing. Because soybeans have been markedly weaker than corn and wheat. They don't get the advantage of Russia that wheat and corn get. And I so thought that the markets are definitely bifurcating right now, showing a difference in sentiment, undoubtedly at this point.
So $14 is going to be pretty tough, isn't it?
I think so, Michelle. I mean, we need to get Mother Nature in Brazil to change its tune. And, I don't really think we're going to get anything adverse at all until December, and we may not even get it in December. I'm pretty favorable for Brazil weather this coming season. I think with La Nina kind of fading here, it sets up a much better profile for Mother Nature in Brazil. They actually might have some big crops for once.
Yeah. And corn's had a tough time getting above 7, even with help from, the situation in the Ukraine, the higher wheat market at times. And so, we have production also maybe on the decline. What is it going to take to get that market over 7, do you think?
I think we've priced in the short crop, Michelle. Whatever the USDA says, I think most people have their own number, right? The problem I have is I look at all the animal feeding units around the world. We've had mass liquidation in Europe due to drought, mass liquidation of the hog herd in China due to poor economics, mass liquidation in the U.S. due to drought. I mean, the animal feeding units are not there. I don't see feed demand being very strong, and the ethanol numbers are starting to erode pretty consistently here. So the demand side says to me that while everyone's focused on the production side being down, we may actually be too optimistic on demand. Maybe those ending stocks are not quite as tight as we think they are.
Right. What about the wheat market? We've seemingly traded a lot of this Russia-Ukraine news and concerns about exports. What's the next thing that we're going to need to keep pushing that market? Because, boy, $10 continues to be pretty stiff resistance for Kansas City for sure.
It should be. I mean, look, as much as we got off to a little bit of a slow start with planting here in the U.S., we are actually getting some good rains in Kansas, some good rains in Texas, Oklahoma. And so we're starting to get a better profile. The planting is picking up pace. We may actually get most of those acres planted in fairly good shape. And if we're correct about an El Nino spring next year for the U.S., that means very, very good moisture and weather for post-dormancy wheat. We actually might have a very sizable crop, but I think it's going to be very hard to move the dial if we can get this crop planted in good shape.
And you and I are talking about all these fundamentals in the grains, but really the outside markets have almost been more dominant, haven't they?
They really have. I mean, my gosh, Russia says one thing and they're going to close the corridor, they're going to drop nuclear bombs, and we go up 30 to 40, and then they say, nah, we're not going to do that. The corridor is fine, the export's still going out, and then we go down 30 to 40. It's been such a tough market to get a handle on day-to-day trading. It's just very, very difficult and almost impossible to predict, because how do you know what the next soundbite's going to be? I'm hopeful we can eventually move away from that, but right now it does not look like Russia's going to come off the front table just yet.
Yeah, and probably the market that's most tied to this outside market influence has been the cotton market, and what a wild, volatile ride that's been lately.
What's interesting is we arguably have the tightest cotton market maybe we've ever seen. And the cotton market has dropped from 120 after the USDA report a few weeks back where it skyrocketed down to back to 80, 85. That tells you how much the market is worried about the demand side. The demand side is deteriorating so rapidly that those ending stocks that we thought were record low actually, as we said in corn, may actually be not as tight as we think. Clothing demand is optional when people get worried about the economy. You can always push off clothing purchases. Maybe you can't put off eating, of course, but you can push off clothing. It's a very cyclical ag commodity, and it's acting as such.
You bet. So the recessionary fears have also had the funds heading for the door over in the livestock futures, and we got a bounce today. Is it just a one-day bounce correcting that big oversold market that we have or not?
Well, the hog market, my goodness, you look at a chart of the hog market and you go, must be Armageddon. It was just unbelievable cascading crash. I mean, it's about time it gets some kind of a bounce in the market, but that kind of a move, that kind of an aggressive move like that, that's a big decision or a big choice that the market's saying that this demand situation is pretty serious and it may not be going away for a while. And cattle is going through a similar situation, maybe not as severe to the downside, but I don't think these demand side fears are going to alleviate until the Fed gives some indication, at least it's going to hit the pause button. And as of the last meeting, it's full system. And that's a problem for the livestock sector.
Absolutely. All right. Thanks for joining us, Sean Hackett with Hackett Financial Advisors.